The U.S. economy has contracted 32.9% in the second quarter.
U.S. economy has contracted 0.6%.
It's going to be hard for people to hear.
The Federal Treasurer has described the latest inflation figures out of the United States.
2020 for many was a big nightmare, and the United States was no different. The pandemic ravaged the economy, halted business activity, and showed how weak the rollercoaster economy is. But as we're about to move more towards normalcy, the IMF has once again warned us about the possibility of the incoming crisis. No matter how much we avoid this word, it just keeps popping on our screens. Recession, recession, and recession. But are we actually one step closer to the horrors of the 2008 global economic recession or the 1929 Great Depression? Is the world's biggest economy on the brink of another collapse? In today's video, we're going to do an economic recession test on the USA. But before moving forward, we'd like you to subscribe to our channel to support our work. Perils from the past. The pandemic resulted in unprecedented disruption to global economies. Speaking of the US alone, the quarterly GDP growth plunged to 4.8%, and there was a sort of panic. Strict lockdowns meant that the economic locomotive of the country came to a standstill. So here is when the government and the central bank came in, which provided a $900 billion fiscal and stimulus relief package and lowered the interest rates to record low rates. Resultantly, during the first half of 2020, the money supply growth rate surged to an annualized rate of 63%, a record high. Assets went up and the stock market kept on rising. The US stock market in particular experienced a significant boom, with major indices such as the S&P 500 and the Nasdaq reached record highs. On top of that, customer spending increased because the money supply was high. Businesses started to invest in new operations. However, the surge in economic activity also led to a significant rise in inflation, which reached its highest level in 40 years. So once again, the government had to intervene, and this time the Fed reversed the process. It started increasing interest rates. In December last year, Federal Reserve raised interest rates by 0.5 percentage point and signaled plans to keep raising them more this year. This ultimately shrank the money supply, and according to the World Bank, M2 in the United States fell to 21.352 trillion in November 22 from a peak of 21.740 trillion in March 2022. M2 is a measure of total money supply in the economy. Now, things aren't looking great, with many predicting another major setback, and realistically we cannot tell exactly what will happen, but we can assume 3 different pathways the US economy could take in 2023. Number 1, a mild recession could take place. Many economists think that a recession this year is inevitable, but there's one school of thought which believes that the nature of the downturn would be a mild one. Beth Ann Bovino, the US chief economist at S&P Global, said she expected to see 2 quarters of negative GDP in the first half of 2023, and the unemployment rate to peak at 5.6% by the end of the year, up from its current level of 3.7%. However, she does add that extra savings during the COVID lockdowns will help people cushion the turbulent times. Well, you could not deny the fact that inflation would immediately die down. It will stay, and there could be chances of massive layoffs. But unlike the 2008 housing market crash, this time the government is equally prepared to tackle the challenge. But some are of the view that calls for recession are overhyped and the economy is relatively in better shape. Number 2, the US could avoid a recession altogether. The Fed have been saying to us that they're aiming for a soft landing. For most of you who don't know, a soft landing in the business cycle is the process of an economy shifting from growth to slow growth to potentially flat as it approaches but avoids a recession. The Fed thinks that a soft landing is possible. Well, this school of thought further adds that the labor market is strong and inflation is softening, which makes a soft landing highly likely. And just this week, US Treasury Secretary Janet Yellen believes that US inflation is coming down, but core measures remain elevated. But there are some economists out there are still ringing the economic alarm bells. Number 3. A severe recession is not off the table. Another possible outcome is a severe economic catastrophe. And while this might sound like clickbait stuff or exaggeration, you never know what might happen in this silly old world. Well, geopolitics can clearly define what would happen in 2023. War in Ukraine seems nowhere towards the end, and this means that wheat shortages, price hikes, and a rise in natural gas would be here to stay. To top it all, further depends on the Chinese economy as well. And if you want a more detailed analysis of the Chinese economy, watch our previous video on the Chinese economic collapse. Nevertheless, if global supply chain issues did not resolve, or if we encounter other problems like China's invasion of Taiwan or no end to the Ukraine war, we might see global financial distress. But quite frankly, the possibility of the third outcome is highly unlikely, and we might not end up exactly in 2008 because the present situation is radically different from the past. For many of us, the images of greedy brokers and dejected apartment buyers were fresh in 2008. It all started with a housing bubble, a real estate market that was geared towards high mortgage influx. The financial players got greedy and started handing loans to those who did not have the capacity to repay. It was a sort of Ponzi scheme, and ultimately borrowers could not pay back, which eventually paralyzed banks and dismantled America's banking system. In short, the shortage of money caused the previous economic downturn, but this time money is not the issue. In fact, banks have loads and loads of money, but this time they cannot spend it. This time the crisis is more of external nature because of the war in Ukraine and the post-pandemic world. Ukraine is a major supplier of key crops, while Russia provides oil, natural gas and fertilizer, and many countries have still not recovered from the perils of the pandemic. So this time around the situation is unique compared to 2008, but by no means that we can say the situation is out of control. In fact, if a global disaster breaks out this time, it would be mayhem for the world and especially for the United States. Implications. Let's start with the stock market. Historically, the stock market has been impacted significantly by recessions in the US. During 2007 to 2009, Wall Street crashed with the S&P 500 falling by approximately 57% from its peak in October 2007 to its low point in March 2009. Likewise, during the dot-com bubble, the Nasdaq Composite Index fell by approximately 78% from its peak in March 2000 to its low point in October 2002. So if there's a recession this time, the stock market will take a heavy toll, but a more significant impact would be on other economies. For instance, Europe is highly dependent on US markets. In 2022, US exports to the EU amounted to $349.34 billion. Moreover, US-China linkages, despite the confrontations, are massive. Thus, any kind of recession or economic inactivity in the US would doom disaster for the rest of the world. Moreover, the dominance of the dollar could also be in a jeopardy. A recession in the US can have implications for the US dollar as a global currency, particularly if the recession is severe or prolonged. And this might allow Euro and Chinese yuan to fill the gap, which could create complex problems. And a downturn in the US could create problems for weaker countries such as those in Africa. Every year, the US contributes massively to the World Health Organization and the UNDP to provide health and education facilities to impoverished countries. A shock to the US could mean a decline in funding for human security, which could eventually increase inequality across the globe. A global recession is not in anyone's interest. Well, it is a fact that the current economic order is going through a tough time. Supply chain issues, inflation, the war in Ukraine, and massive income inequality are making things worse. Back in the US, there are talks of an incoming recession. There could be three possibilities: a mild recession, no recession, or an all-out catastrophe. No possibility can be ruled out. But governments across the globe would be trying to make sure that recession is is averted. It's time for cooperation among great powers. It's time for action. Otherwise, an economic downfall in the US would mean an economic downfall for the rest of the world. Let's hope sanity prevails. So, what do you think about the current economic crisis? Can recession in the US be avoided? Let us know your thoughts in the comments section, and don't forget to like and subscribe to the channel.